Hello, I'm your host, Chase Majerus, and this is your Monday update on This Week Today, brought to you by synergyone Lending. Let's get it started. The spring buying season should be like a big party for millennials, finally moving out of their parents' house or no longer paying rent on a costly apartment. Except that won't be the case this year. Starter homes for these young whippersnappers are going to be priced out of their range due to record low housing inventory, despite solid job and income growth. Meanwhile, existing homeowners who would like to move to bigger homes fear not finding one, thus having to shell out more money for it. Many existing homeowners are just staying put, further limiting the supply of starter homes and pushing up their prices. Already, house hunters are waiving inspections, making offers without even seeing homes, and bidding well above asking price. No surprise here, but student loan debt is crushing the dream for homeownership for some 45 million people. While the average consumer owes more than $30,000, almost a fifth owe more than $100,000, according to the National Association of Realtors. It's worth reminding ourselves that monthly student loan payments can eat up a large slice of income, threaten to push down credit scores, and make saving nearly impossible. All huge obstacles, of course, to landing in a house. Some good news for existing homeowners. The amount of equity today's homeowners are able to tap is at the highest level on record. The combined amount of so-called tappable equity is $5.4 trillion, which is 10% more than at the pre-recession peak in 2005. With stricter lending requirements, homeowners today are far more conservative. Last year, even with record equity, homeowners took out only $262 billion via cash-out refinances or home equity lines of credit or HELOCs. And while that sounds like a boatload of money to me, it's less than 1.25% of all available equity, which is a 4-year low. Looks to be a bit of a slow start for our Economic Weekly Update, with a jump in announcements starting Wednesday, where we will see information on the Consumer Price Index and MBA mortgage applications, which took a 3.3% dip last week. As your quick reminder, the Consumer Price Index is the most widely followed monthly indicator of inflation. Then on Thursday, the Fed announces its report on the Fed balance sheet. This report is likely to get increasing attention as the Federal Reserve reduces spending from the $4.5 trillion peak reached in 2014 of October. This peak was reached after the Fed made an effort to hold down long-term interest rates and in turn stimulate the economy in late 2008. Thank you for joining me on your update on This Week Today. For more questions about your mortgage opportunity, check out synergyone on Facebook, Twitter, Instagram, or LinkedIn. If you're looking to join the synergyone team, head to joins1l.com. I'm your host, Chase Majerus, and you can find me and follow me on social media as well. Have a super week.